Welcome to Quantum Finance. My name is Parker, and this is our weekly recap for Friday, August 4th. So, in this video, we'll just go over the different markets, look at their charts, then we'll go over some news from this week, and then we'll take a look at the economic calendar for next week. So, starting here with the stock market with the S&P 500 Spider ETF, as you can see, massive red week this week, not quite able to get up and touch these previous highs from last March. Getting a big pullback here as the US was downgraded from a AAA credit rating to a AA plus. If you look over here at the daily chart, as you can see, Monday, Tuesday, really not much action, just kind of sitting up here, and then we got that downgrade on Wednesday. As you can see, the big sell-off here, and then continuing on today with a massive sell-off. I would maybe expect down for a retest of these highs from June. Looking at the debt market with the U.S. 10-year yield, we did have a massive week until today. There was a big sell-off today, but as you can see, the 10-year yield did break these highs from July and February, which is a pretty big, significant breakout here. But as you can see, getting a massive pullback here today. Just pretty wild move when you have the debt market making this wild of a move. I mean, topping out here at 4.2%, and it opened the week at 3.9%. So a pretty crazy move here in the debt market. Turning to the dollar, we do have a small green week here in the dollar, as you can see, getting rejected off that midline here on the weekly chart. It is kind of bullish here on the daily chart, as you see, pulling down into that weekly midline, kind of bouncing off that level. But still, you would like to see this to get above that weekly midline before we start getting more bullish on the dollar. Turning to cryptocurrencies, we have Bitcoin. Bitcoin getting its third red week in a row. Pretty, boring, honestly, in Bitcoin world. Not too much going on, but as you can see, still holding this uptrend that it's been in, since it bottomed out here in November. Pulling down into this weekly midline, which does line up with that uptrend. So, and we are getting really squeezed here on the weekly chart. This might be like the most squeezed Bitcoin has ever been. So it would be nice for it to hold this weekly midline and get a nice push to the upside, getting through these levels back here from June and January. Turning to XRP. XRP, pretty big red week this week, as you can see. When we did get that big move off the lawsuit announcement, as you can see, running into that downtrend line that we've been in for a couple of years now, 4 or 5 years. Big red week this week. I did say in my XRP video that I did maybe expect a retest of this 55 cent level, because XRP is now the only digital asset with clarity. And, with that news, the people in power, the big money managers, they're going to want to drive this price down so they can buy more now. And if you do look, we will have this weekly midline line up with these previous highs back here, which does line up with these previous lows. So this is a major area of support down here around this 58 cent level. So definitely keep an eye on that. We are getting pretty close right now at 63 cents. Pretty big red day today, down 4.4%. But I would maybe expect a lot of support and buying coming in here once we break down below that 60 cent level. Turning to commodities, we have oil. Oil continuing its parabolic move to the upside after getting that breakout here at the beginning of last month. As you can see, just really just marching forward here. It's had, 1, 2, 3, 4, 5, 6 green weeks in a row. But as you see, we are running into resistance here, running into that upper extreme and this previous high back here from April and January and November. So a lot of resistance up here at this 82 cent level. Now we can look at some news. So we have the average U.S. gasoline price now at the highest level since October 2022. And, this is obvious because you just saw that oil chart. Oil is just going straight up for, well over a month now. We also have the 30-year average mortgage rate in the U.S. hit 7.2%, which is a 23-year high. And we also have the average interest rate on a 48-month new car loan in the U.S. moving up to 7.59%, which is the highest level we've seen since 2007. As I mentioned earlier, the U.S. did get a credit rating downgrade from AAA to AA+. And here's just a couple of reasons why. Erosion of governance, rising government deficits, general government debt rising, unaddressed medium-term fiscal challenges, and the Federal Reserve just constantly raising rates. We also had some news that the U.S. Treasury expects to borrow an additional $1.8 trillion by the end of the year. Ukraine also received a grant of $1.25 billion from the United States via the World Bank. The median sales price of a home in the U.S. is now 560% of the median household income. In 2008, during the Great Financial Crisis, it was sitting at only 360%. This is the least affordable housing market in history. The Americans' confidence in the U.S. military is the lowest in 2 decades from a recent poll. The SEC also told Coinbase that all cryptocurrencies except Bitcoin are securities, which is kind of ridiculous that they're still saying this even after they, pretty much lost the Ripple Labs lawsuit. And we also have the U.S. sending $345 million in weapons to Taiwan. definitely watch this, right? Because this could be a sign that, maybe the war on Ukraine is starting to like die out and they want some new way to, launder a bunch of money. And, you know, we've kind of expected a war with China, for a while now. And, when the U.S. starts poking the bear like this, I would maybe expect this to, you know, ramp up pretty soon with the tensions with China. So now we can look at the economic calendar for next week. So next week, Tuesday, we get some short-term energy outlook. Wednesday, we get crude oil inventories. Thursday, we get CPI, which is inflation data and initial jobless claims. And then Friday, we get the producer price index. But yeah, that'll do it for the video. Appreciate y'all watching, and I will talk to y'all later.